What's going on, guys? I've been trying to get this video out for a couple of days, but here it goes anyway. All right. The stock market has been rebounding, Bitcoin has been going up, and I want you to know why. It's because the Federal Reserve has been printing money again. The money printing has reversed months of quantitative tightening, about 5 months worth. But the Federal Reserve, they're saying that it's not quantitative easing, but it's not quantitative easing either. So they're basically saying that it's not money printing, but it's not money printing. It's something completely new. Let me tell you what's going on. The Federal Reserve is supposed to be doing quantitative tightening in order to lower inflation. They're supposed to be taking money out of the economic system by reducing their balance sheets, but the banks got in trouble. So the Fed came to the rescue. They expanded their balance sheets by a net $320 billion in March. However, because the Fed didn't buy the treasuries, they're saying that technically it's not quantitative easing. But I want to tell you the truth. I want to tell you what's going on. The Federal Reserve is saying that technically it's not quantitative easing because no new money has been created. That is a lie. So when you look at the Federal Reserve's newly created Bank Term Funding Program, their BTFP, they're letting the banks put up their treasuries or other assets as collateral at par value. So the Fed isn't buying the treasuries, the banks are just posting them as collateral, but you still have the Fed injecting cash into the system, and additionally, they're giving par value. So if you post up a treasury bond that's worth $70 and the Federal Reserve gives you $100, then isn't that money printing? So new money that never existed in the system above fair value is entering the system. So if that's not money printing, then I don't know what is. But I do agree with one part of what they're saying. If the loan does get paid back and the collateral does get returned, now the balance sheet will shrink and that process will be QT. But in the meantime, what they're doing right now is QE. So I do agree that it's not going to be as stimulative as handing out stimulus checks, but this is still money printing being disguised as something else. So their BTFP facility is backdoor QE. The Fed's balance sheet is growing along with the reserves. So now I want you to know this whole situation, this whole process, it's more complicated and even worse than you would think. Did you know that the Federal Reserve is actually losing money? They're losing billions of dollars every week. The Fed has bought up trillions of dollars worth of treasuries and mortgage backed securities, and they need to pay interest to the institutions that park their money with them. Since September, the Fed has lost close to $50 billion. Now, I want you to notice when the Federal Reserve makes money, they send most of it back to the US Treasury. So the Treasury makes about $100 billion a year like this, and they absolutely love it. But this year, the Fed is on track to losing more than $100 billion. So when the Federal Reserve makes a profit, they send the bulk of it back to the US Treasury. But you know what happens when the Federal Reserve loses money? You know what they do? They just print it. They just make up the difference. So the Federal Reserve has not posted an annual loss in over 100 years, but the Federal Reserve is expected to continue losing money every year from now until 2026. That is how bad the situation is. But honestly, that's just the tip of the iceberg. So, you know how Silicon Valley Bank, they went down? They had too many treasury bonds, interest rates went up, then the treasury bonds fell in value, and they had to liquidate some of that. They realized billions of dollars in losses. So think about it. This is the same situation with the Federal Reserve. The Federal Reserve's portfolio is all underwater right now because of their assets were purchased when interest rates were much lower. Think about that. In addition to the Federal Reserve losing billions of dollars each week, they're carrying about $1 trillion of unrealized losses. So the Federal Reserve is basically Silicon Valley Bank on steroids. It's exponentially worse. And it's funny because the Federal Reserve is trying to put out all these fires. They're trying to save the banking industry while at the same time their own house is on fire. So just think about all that. I mean, this is a disaster in the making. Now, I want to tell you what's going on with the stock market, and I'm going to be honest with you. I'm going to tell you the truth because I don't know anyone else who's going to tell you this. In the United States, we do not have a free market economy. A free market economy is defined as an economic system based on supply and demand with little or no government control. The American economic system is more centrally planned than you think. Who do you think determines the direction of the housing markets? Who do you really think that the buyers or the sellers? Is it mortgage interest rates dictated by the Federal Reserve? So there is no true price discovery. We're at the mercy of the Federal Reserve. Bubbles forming, bubbles popping. Now, who determines whether we're going to have an economic boom or economic bust? Is it based on businesses and consumers and productivity? Of course not. It's based on is there easy money? Is there easy money policy in place by the Federal Reserve, or is there not? Who determines the direction of the stock markets? Is it companies going at it? Is it who's going to be the best or who's going to outcompete? No, it's based on quantitative easing. Or is there quantitative tightening? It's the monetary policy by the Federal Reserve. Who are we kidding? So listen, we all know the answer. We all know what's going on here. But there are so few people that are brave enough to actually say the truth that the Federal Reserve determines the direction of the economy, the housing market, the bond market, the stock market. Look, the history books, I think, they're going to write about this time when the central bankers gain too much power. But today, right now, we're focusing on the Federal Reserve and the stock market, what they're going to do with the stock markets. So the stock market's performance has an 87% correlation with the Federal Reserve's quantitative easing policy. So the stock market has been going up because the Federal Reserve has been printing money and because of market psychology. So there's been trouble at the banks. The Fed came running to the rescue. Emergency meetings, newly created lending facilities, they're bending over backwards. So now the stock market expects the Federal Reserve has their back. There's a pivot in place. And you know what? I don't blame the stock market for believing that or acting the way it is, because Powell, he's acting all tough. He's trying to appear all tough, but the market called the bluff. They called the bluff of the Federal Reserve, and the Federal Reserve, they folded. They insta-folded. So this will obviously going to be counterproductive in their fight against inflation. We just don't know how bad the consequences will be, but I just want you to think about the dangers that could be ahead. Well, at least the ones that we know of. The banks, they're not out of the woods yet. Commercial real estate, you probably heard a little bit about that, but that could escalate the situation if something breaks, especially related to the banks, that you can expect that the Federal Reserve is going to print that money and expand the balance sheet like there is no tomorrow. So the way I see it, there are four outcomes here. The first one of four, is a recession. Two, a second outcome could be high inflation. Three, stagflation. Or four, a soft landing, which in my opinion is not likely. The Federal Reserve is stuck between a rock and a hard place, but I think that there's still enough wiggle room, that there's still enough economic slack to potentially avoid an economic depression. Right now, the Federal Reserve, they're trying to get involved everywhere. They're trying to do everything they can to produce a soft landing, and they're micromanaging the banking turmoil, but once they realize and admit that there's not going to be a soft landing, then they're going to have to decide which path will be the most tolerable. Is it going to be a recession? Is it going to be high inflation? Or is it going to be stagflation? So I think that this is how the story is going to play out. Once the Federal Reserve realizes that they cannot pull off a soft landing, then they're going to choose a recession. So that is when unemployment goes up and when zombie companies start to go bankrupt and go out of business. But this is where inflation continues to fall. We're talking about CPI and PCE coming down, but then we're going to come across the point in time where that pain, that economic pain, is intolerable. And at that point in time, that is when the Federal Reserve will shift their monetary policy. They're going to do their Fed pivots, and that's when the Federal Reserve will decide trade off higher inflation for a less severe economic recession. Many investors are hoping a Fed pivot will be great news for equities, but history shows that the Fed pivot is the start of a bear market. It's not the end of it. The collapse usually comes after the pivots. So, in addition to all the recent money printing, Bitcoin has been going up because people think that it will be a hedge against bank runs, against financial instability. So, that's basically the original purpose and the intention by Satoshi Nakamoto. However, is that really how it's going to play out? Or will Bitcoin and crypto be treated no differently than stocks on the NASDAQ? So, let me know what you think. Just understand that the truth, how this game is played, but all of this is getting very dangerous really quickly because the Federal Reserve's credibility is now coming into question. And just like any other bank confidence, it must not be lost. All right? So that's really all I got for you right now. I've been trying to get this video out. Let's go into a little bit of TA at the end of this here because Bitcoin's been going sideways here for quite some time. They keep reversing away from the range high, and they're also reversing from the range low of the range high. So, and they're really, coming away from the range high point of control now. So, will they spike up into 30K, or will we get that pullback down into the 25 or more zone? So that's what I'm looking for right now in the Bitcoin price. Not much going on. We're just trading sideways. Tomorrow is a bank holiday, so be careful out there. New York session, they could be doing their trickery. That's all I got for you. I'll see you on the next video. Manage risk and trade accordingly. I'm out.